Nick Ogden, what a great chance to sit and chat with you for a little bit. Your background as one of the earliest pioneers of e-commerce, if not the earliest pioneer of e-commerce in the early 90s, establishing and building Worldpay, selling it to the Royal Bank of Scotland for way too little money, and it recently got purchased for $42 billion, as I understand it. Creating ClearBank, the first new clearing bank in the United Kingdom in 250 years, and now building RTGS Global, which is a global clearing bank with a couple of Nova Scotian individuals. Lots to talk about, but I really want to speak to you to begin with about the work you've done in terms of helping to get financial technology companies, fintechs, integrated into the COVID response in the UK. And just a sort of an understanding of what value they have brought in that process and how you encouraged the government to get going. So, Nick, great to have a chance to chat with you.
Okay. Well, I mean, COVID-19 caught us all by surprise, I think is the phrase. And, with the best will in the world, despite what the spin doctors say, no government was set up ready for this. Interestingly, going back to RBS in 2007, before the global financial crisis, RBS had in their annual report the only threat that was likely to hit them was a global pandemic. They omitted to point out that they'd spent their customers' money. And so if we could find in Gogarburn, which is where their head office is, that plan from 2007, it may well have helped us. But anyway, so what happened was there was an immediate, I guess, call to arms. The economy was crashing. And what COVID-19 created was something completely different from what we've seen before. Normally, we've seen economic disasters, recessions, bank failures, creating the issues that we're facing today. That's not this environment, nowhere, no shape or form. What effectively has happened is the economy has been shut down and the ability for people to spend money has been withdrawn. All right, that's unprecedented. And because of that, that's caused massive shockwaves within the economy. And probably in Canada, the same as in the UK, we're seeing different sectors hit in different ways. Fortunately, the food services side of the economy has managed to maintain, and so we're all able to eat and drink and all the rest of it. But tourism's been shot, travel's been shot. All of those areas are under immense pressure, and they're going to take years to recover. When the issue started to arise in the UK, we had an announcement in relation to a project called CBILS, which was, effectively coronavirus loans to companies to try and provide some liquidity to bridge over this period of uncertainty. And it was a bit like somebody looking down a telescope the wrong way, trying to see where the end of the tunnel actually was, and hoping that they put the pen or the pin in the right point. And it's obviously impossible to do so. Next to that, we also had the furlough scheme, which was to deal with the human capital that every business employs, to try and soften that blow, maintain the ability for people to go back to work when the crisis was overcome, and to accept that that was a cost of the economic recovery. Mm-hmm. Part of the problem in relation to dealing with, I guess, the working capital challenges, which is what CBILS and then subsequently BBILS was intended to do, was that when you're in a crisis, all right, especially one that you haven't planned for, you actually need to get a lot of people to try and help you out of it. And the mistake that I think the UK government made, and it wasn't intentional, none of it, everybody was learning, none of this was intentional, was to probably have a cabinet meeting and say, look, how the hell's going to help sort this out? And somebody put their hand up and said, the banks will do this. They know about money. And Boris said, thank God for the banks. We'll let them distribute this £330 billion out, and the problem's gone away, right? The issue with that, of course, was the problem hadn't gone away, and moving it to the banks didn't solve that, because in the same way that the government was in distress trying to sort out what the hell how to deal with this, so were the banks. I mean, one bank in the UK's call centre, which was in India, got closed down because they had coronavirus in it, so they lost the whole of their call centre. They'd never ever thought that was going to happen. It was, we got two call centres, that's going to be fine. The UK one got closed down and the Indian one got closed down. So all of these things were going on. And so the other assumption that had been taken in relation to delivering the money into the economy was that the government wouldn't have to use any money, and that they would leverage the balance sheets of the main banks against a guarantee from the government to say, okay, fine, we'll guarantee these loans, all right, on these terms. You've got a load of money. This crisis isn't about your liquidity. In fact, you're better capitalized now than you've probably ever been in your lives. Therefore, you can use this money against us. So it's 100% guarantee. You can use your facilities window if you need to at the Bank of England, but effectively it's on your balance sheet. So, we've got a thing called the CMA9 in the UK, which is the 9 main banks who are geared up to do that. And so they started to try to deal with an onslaught from effectively, we've got about 4.4 million businesses in the UK. So assume that in week one, you had 500,000 approaching 1 million businesses reaching out to try and get hold of some of this perceived free money. Well, it doesn't work. It's impossible. Many of the businesses had moved over the course of the preceding 10 years to the new fintech banks, the new challenger banks. Those new challenger banks didn't have a balance sheet capable of supporting the level of lending that was being required of them by their customers, and didn't have the assets to go to the Bank of England to secure additional funding in the near term, right? And so when you were trying to get to a situation where, if you've got 10 people, you have to, want to buy something from you. If you have 5 people serving them, you can do it in half the time than you can if you've got one person trying to serve them. And so what happened was that all of the distribution, which is vital in an economy, was shrunk into a very, very small number of people. And in fact, the whole of the alternative finance sector, there are 167 alternative lenders in the UK. They were all frozen out of being in a position to help.
The big nine had total control, or were the total conduit.
Yeah, because not only were they frozen out because they weren't actually allowed, because they hadn't gone through the application process to actually be part of these funding processes, their liquidity had dried up as well. Because what happened was that the interbank markets, in the same way as the global financial crisis of 2007, 2008, the interbank market froze. The interbank market froze. It didn't freeze for the same reason that there was concern over liquidity contagion. It froze because everybody was just panicked, didn't know what to do. All right, so it wasn't a financial risk. It was just until we know what's going on, we're not doing anything, which is probably understandable. You then got to a situation where the alternative lenders, if they wanted to raise funds, all right, go into the market and get funds against the risk that was perceived, were having to borrow at between 8 to 10%. Right now, you would say that's payday loan rates over in the UK. By the time they'd added margin onto that and all the rest of it, they're up 16 to 18% per annum against a government scheme of 1.5 to 2%. So they were out of market.
Yeah,
it just didn't work.
Yeah.
So what we did was we went to the government, went directly into the Chancellor's office via some connections we've got. Hugh Van Stennis, who was Mark Carney's personal advisor at the Bank of England, and it's a shame that you repatriated Mark. We'd have liked to keep him, but we went to them and said, look, you need to get greater distribution. This wasn't about the rights or wrongs of anything. It was just the pure math of saying, if we go from 7 to 172, this makes a whole lot more sense. All right, you can deal with more businesses.
You can deal with the individual businesses right across the country.
Correct. All right. And we also said that we felt they needed to change the approach. In Switzerland, what they'd done was they said, look, we're going to allow businesses to borrow up to 120,000 Swiss francs. Roughly call that $120,000, and effectively they could phase those payments. So it was almost like a government credit card. You could draw down 20,000 of your 120,000. You didn't have to apply for the whole loan, and that scheme worked and has worked incredibly well. It's also an offence in Switzerland to lie to your bank. So I think there may well have been some rules in relation to sort of maintaining the conduct. But as opposed to just throwing a lump sum number out, it was done on a progressive basis. And they lent, I think it was 15 billion Swiss francs within about 4 weeks out to their economy. The UK didn't take that approach. Initially, we went out with the C-bills system, which was really complicated, which has had about a 15% conversion rate.
That's
now, this is a crisis we're in, and we're trying to put funds into the economy, all right? And it hasn't done that at the rate that it was required to do, all right? We then introduced the Bibbles, which was the small loans capability. Again, same roots, same problems. And you know, I'm fortunate. I know people in the Competition and Markets Authority and all the rest of it. And I was incensed on a Monday a few months ago when the BBC Lunchtime News was saying, look, if you're applying for one of these bounce back loan schemes and you don't bank with the big banks and your existing challenger bank can't provide you with this service, use the current account switching scheme to move from your new digital bank back to the old incumbents who could provide you with a service. That was, I felt, anti-competitive from a market position. But B, you know, we've had the Conservative government in place since 2010. Post the global financial crisis, they have built a fintech marketplace, which we believe was the envy of the world.
Yes.
They ignored it. They forgot it existed.
And their initial response demonstrates that.
Yeah. They just didn't get it.
So let's talk a little bit, Nick, about what these fintech lenders can do for small businesses and why they're able to deliver more value than the traditional banks, or they serve a different type of the market, part of the market, different type of businesses at a different stage, more responsively than the larger, more established banks. Let's just speak about that for a little bit.
I will send you, you're not going to believe this statement. I'm going to send you a report that was produced by the Bank of England in March 2020, so recently, highlighting the fact that most small to medium-sized businesses have moved to the alternative lending marketplace.
Really? So the majority in the UK?
Yeah. Right. And guess what happened in March? We had COVID. So this report that had just come out it was a follow-on from Hugh Van Stennis.
So it was known at the time of the response, it was known that they had already taken over dominance of the marketplace because of the services they're providing.
Correct.
But they were not included in the initial plans.
Correct. And if
go ahead.
I'll say, if you just think back, what's happening is that we're creating a market of choice rather than a market of default. I mean, historically in the UK, you had the main banks, and if you wanted a loan, you'd go to ask your bank manager. And if he said no, you'd think, I better not go and do anything elsewhere, because if he gets upset with me, he might ask me to move banks. I don't want to go through that hassle. All right. Where we've moved to now is that, you know, it's natural to have choice and to get the right deal for your business. And it may well be the right deal for your business is different to the one that your bank will offer you. That's what we now have in the UK. And effectively, what we were doing is we'd created a market of choice, and we took that choice away.
So tell me how you started to change the perception. You had meetings with key officials in the UK. What did you do to start to convince them of this reality that they were missing and the opportunity it represented?
Yeah, well, I'm fortunate, as you mentioned in your little introduction. I'm sort of I founded ClearBank. We'll come on to that later on, I guess. So I'm a main board director of a clearing bank in the UK. All right, so we have the ability. We're members of all the payment schemes and all the rest of it. We're centrally banked. We are a very, very niche bank. We provide financial services to other regulated businesses. So we don't deal with business customers or consumer customers. So we are neutral in the marketplace. We also have a unique position in so far as exactly as per a central bank, we can repay all of our customers' money on demand. So if every single one of our customers asks for their cash back today, we can do that. We'd have disappointed shareholders, but it's a
remarkable model that is unusual in the banking industry.
It is a remarkable model. It was interesting. The Federal Reserve asked me to go and set one up for them in America. But anyway, it's another story for another day. Right. But because we had that position, we were neutral. So what we could do was basically we could channel central bank money, government money directly through to where it was required. So if you can imagine our 167 alternative lenders, we could say to them, okay, fine, what we're going to do is put 5 billion, which is the sum that we went after. We'll put 5 billion in reserve accounts at the Bank of England. And effectively what we'll do is then, based upon the terms of the loans, which, Rishi Sunak, you agree them, these lenders adhere to, we will then fund those loans from that 5 billion.
Got it. So you did get their support. And how long?
Well, actually, let me carry on for a second. And we will then, when the loan repayments come due, they will return back via ClearBank, and we'll throw them straight back to the Exchequer.
Wow. So
we got buy-in and support from that, from our regulators, all right, and the Bank of England.
And so just as we start to wrap up here, how long was it till you started till you got that approval to then you started distributing the funds? And what was you said a 15% subscription rate in one of the other major programs offered by the government of the UK.
Yeah.
How long was it till you started to get that 5 billion deployed?
We're still waiting.
Oh,
it never happened.
It never happened.
It never happened. And what's happened over the course of the last 14 to 16 weeks is slowly some of the alternative lenders have got access into the CBILS and BIBLS scheme. And I was saying at the start of this interview, today, everybody is now starting to realize the fact that what we should have done didn't get done. All right. And there is a massive, massive tsunami of insolvency and company failures going to run through the UK due to the fact that the funds weren't distributed when they should have been 14 weeks ago. Now it's a little bit late. And I know that Rishi Sunak's been making an announcement today about some of the changes that they're trying to make in the UK. They're doing that off the backdrop, which I'm certain you politicians in Canada are aware of the real threats of a second peak of COVID-19 in tandem with seasonal influenza. And so, we have a real problem, Why they didn't make their money available is beyond me. Right? Why they didn't go down that route, I don't know. We certainly had very, very significant buy-in and support from all of the industry groups, but they chose not to go down that route.
What's your advice to Canada as we wrap up here? What is your advice to Canadians?
Please don't follow the model of the UK.
Yeah.
I mean, the reason why that was followed, I suspect, was because, we've got the main banks, the tier one banks, they're unlikely to fail, all right? And we don't know what's going to happen. I suspect there was a logic to that, or a thought behind that. In Canada, you've got a similar environment. You're trying to build a distributed, competitive marketplace which serves your economy better than a few banks acting as a monopoly. You've got the opportunity to either embrace that now as a consequence of the crisis that we face, or potentially curtail its activities. Because if it doesn't thrive and doesn't come through this, its prospects for coming out the other side and restarting are quite tough. Right? And again, it goes back to, in every business that you set up, distribution, the ability to sell and serve is the key. And if Absolutely. You can't do that, all right, because you don't have the capability to do that, all right, then you'll fail. And if you've got those assets available in the country and you're not utilizing them, you're actually failing your citizens.
Yep. Absolutely. These are important lessons for us to take to heart in Canada. Yeah. So if I was to summarize, we need to focus on the distribution against qualifying criteria, obviously, and in a way that iterates as you go along to see the response. Just tell me a little bit about the data that might be able to be flowing back to the Treasury in the UK that comes from these alternative lenders? Because I would have to believe there's some very powerful real-time data that might be available relative to traditional banks.
Yeah, for sure. I mean, interestingly, the HMRC, you would be surprised that our tax authority equally got on the phone to me and saying, we don't understand why the government isn't doing things in a different way. The data flows that would have come back from basically reacting to this crisis, putting in and using digital technology, were huge and ongoing. They weren't temporary for the crisis. They were huge and ongoing, and would have provided a whole raft of data into the UK economy in relation to monetary policy decisions, import and export calculations. You know, we're facing a thing called Brexit on top of everything else, which we conveniently have brushed under the carpet. You know, there are a number of big challenges facing the United Kingdom over the course of the next, 6 through 24 months minimum. And that our ability to have some qualitative data in relation to what the market was doing has been lost by our inaction, if you like, to embrace the digital capabilities that fintech could have offered.
Listen, Nick, thank you so much for this conversation. It is really important for us to see that there are lessons to be learned. I think this last point about the fact that rather than getting snapshots of photos that you took on a vacation 10 years ago because they finally got processed, getting that real-time movie about what's going on in the economy is a huge value add that I think everybody needs right now because of the fact that this pandemic is moving so quickly. So that last to me is almost as strong as any as to why we need to make some headway here.
Yep.
But I'm looking forward to the next conversation about talking about how you got the first new clearing bank in the UK in 250 years. And after that, I want to have a conversation about how you've been building a global clearing bank with a few people that I know well in Nova Scotia. So thanks for this conversation, Nick, and I look forward to the next two.
Thank you.